99% of all price action strategies that you see on YouTube are absolute cope. So I decided to test over 1,000 trades using just the 1 hour time frame, and this setup that you're about to learn kept showing up as the consistent winner. So the first step in identifying this system is very simply identifying the 1 hour structure. Now, as you can quite clearly see in this example, we're very simply looking at higher highs and higher lows. Is the 1 hour making higher highs and higher lows? If so, then we're bullish and looking for buys. If not, then we're obviously bearish and looking for sells. Now, it's very important before we go any further that everything that I'm about to tell you in this video is backed off of data, backed off over 1,000 trades that I've taken live on YouTube throughout the past 3 years. It's also backed off the data that I used last month alone to get over $31,000 in payouts. So now that you understand that, let's move on to step 2. Now, step number 2 is very simple. We need to identify the 1 hour ranges. And what I mean by that is very clearly we need to identify the support and resistance levels. Now, the way that we're going to identify these levels is very simple. We need to find areas of rejection that are appearing over and over on the chart. So you can see quite clearly these two right here link up. You have a rejection right here, so a resistance, and you have a support right here being formed, meaning this is a very key area. The same thing here. Let's imagine we have some more to the left and the same thing up here. I'm going to show you in more detail when we get to the charts. But now that we have our support and resistance levels, we move on to step number 3 in this system. Step number 3 is identifying our rejection zones. Now, a lot of the times, these will be the exact same as our resistances that we've just checked. And this is essentially the zone we are looking for this wick to reject off of or bounce off of. Now, in this case, we can just use the support that we've formed here, but it may be in the past that we have a price action mirror or other confluence that I've taught on my channel before, but we're not going to get into that right now. So if you do want to learn the price action mirrors or how I understand where liquidity comes from, click on the other videos on my channel and they will teach you in a lot more detail. Now, for this strategy, this is a continuation based model, meaning if the market is trending bullish, we are looking for buys to continue the trend. If the market is trending bearish, we will be looking at sells to continue that same trend. So in this case, there are 2 things that we can use to actually look at our target ranges. And this is essentially going to be where we're placing our TP. Now, the first one is actually you can look at this previous high right here. Now, we can look at targeting a previous high, or we can look at targeting the next high to be made. But before you understand that, we need to look at where we're actually getting our entry model. So we are looking at catching a pullback and taking a continuation up. You can see the trade is based right here. So we're looking at taking a TP either off of this area here, which is the previous high, or if the market is going to continue as we are targeting a continuation, what's going to happen after this high is broken? Well, if we're actually bullish in the market, you're going to see another high being made. And that high is most likely going to be off of that next resistance area up here, which is what we're going to end up targeting. So you can either place your TP for this position right here or at that next high to be made, but we'll get into that after I've covered steps 5 and 6. Now, step number 5 in order to be able to trade this model is we are looking for a pullback. Now, very simply, when the market is trending like this, so many people say to themselves, oh yeah, it's all right, we can just take a buy because the market is trending upwards and the trend is our friend. But if they're managing risk appropriately, what ends up happening always is they end up catching a high right here. They end up buying on the high. They're using a stop loss. They get taken out by a few ticks at the bottom here, and then the market inevitably runs up in the direction that they were trading in anyway. Then what happens is their TP would have got hit. They end up FOMOing back into the position at this high, and the cycle repeats. And if that's you right now, then you need to listen to what I'm about to say. So instead of waiting and trying to catch a position as the market is trending up, we are going to wait for the pullback. We're going to catch a position after the market has pulled back, grab liquidity and recharged up for that next move, because as we know, the market always moves in this structure right here of higher highs and higher lows, unless we're bearish and then we're making lower lows and lower highs, very simply. But you might be asking me, Sam, how do we know where this low is going to be? And that is the magic of this entry model. You do not need to know where that pullback is going to be. We are not trying to top tick or bottom tick this pullback. We are going to wait for the confirmation to be made, and instead of buying right here or trying to buy right here, what's going to actually happen is we're going to wait for a small confirmation and end up buying right here as that next move moves further. And yes, we're not catching the bottom. What we are ending up actually doing is catching a great entry nonetheless, with 10 times more confirmation than anyone trying to catch the bottom of a pullback. So once that pullback has been made, very simply, we have to now take step number 6 into account. Step number 6 is liquidity and the confirmation close. Now, what that essentially means is once we've had this pullback, which you can see right here, we have first of all, we have our 1 hour structure, bullish. Second of all, the range has been made, we've tapped into the rejection zone, and now essentially we've identified our target range. Then we've had our pullback into the rejection zone, which is this support right here. Once that happens, we need to see two things. We need to see, first of all, liquidity generation. Now that is normally done in the form of a bottom wick. Now this bottom wick being made, bonus points if it sweeps below the level right here. If it sweeps below that, then even better. And if it sweeps previous candle wicks, as you can see this one did right here, it swept below this previous candle. Let's say there's some more down here, it swept below them as well. That is even better. Now once that liquidity generation in the form of a bottom wick has been made, we need to see this candle where the liquidity was grabbed on close bullish. It's a very simple confirmation, but all we need to see is this candle close bullish. Once that happens, we are ready to go. That is the setup formed, and now we just need to grab an entry. Now the way that we do that again is super simple. You can either do one of two things. The entry can either be immediately as this 1 hour candle here closes, you can jump in a buy, as you can see right here, and essentially ride it up towards our target ranges here to the right, which was, as we said, this high here or the next high. Or as that 1 hour candle closes, you can wait for the next one to come down, make that bottom wick, as you can see right here it did, and have a buy stop on the flip of that candle. Either way, the target is going to be the exact same. The entry is just a little bit different. And then all we do is simply place our stop loss below that previous candle, TP on this high or towards that next high, depending on how you want to essentially be aggressive with your TP or not. And that is the entry model. It's extremely simple, but don't just take my word for it. Let's jump onto the chart so I can show you some live examples of it actually playing out. Okay, so we are on the charts right now, and I've just clicked on a random bar here on replay mode. So we're going to go ahead and actually take a look at what our entry criteria were earlier. Very simply, we were looking for 1 hour structure, then the 1 hour ranges and rejection zones. So we're going to go ahead and figure out the 1 hour structure. As you can quite clearly see, we've actually started to consolidate a little bit, but we are making now higher highs and higher lows on that 1 hour time frame, and so we are bullish and looking for buys. Next, we need to look at our essentially support and resistance areas. Now for me, I can quite clearly see a resistance here. There's another one up here towards the left at 81, and then we also have some key areas down here towards 304 and 327. Now let's see how these actually go ahead and play out and whether or not we can get an entry. So we'll click through here. And essentially now we're waiting for that pullback. And look, now what's happened here is we have had the pullback, which is absolutely perfect. So if we're looking at this checklist right now, what we have currently is we have 1 hour bullish structure, we have a 1 hour range being formed, we have the rejection zone targeted, and now we're looking at our target ranges. But before we get that entry, we need to see our pullback and then our liquidity and confirmation closure. Now, as you can quite clearly see, we've already had the pullback here. We've had a pullback into what I would say is personally a key area right here that we can mark out on the chart. So you've had a pullback into that area, and what have you had right here as well? You've had a strong liquidity grab. Remember what I mentioned about the wicks being broken? It broke the previous wick and these previous wicks here to the left, and you've ended up closing bullish. So you now have your pullback into a key area, closing bullish. So what we're going to very simply do here is we are going to go ahead and have a buy the moment that next candle opens, and we're going to be putting our stop loss below this candle right here. TP could either be, as we said, this previous high here as a target, or you could be looking at targeting these highs over here to the left, which is what we expect that next high to be. If we map out this structure, you can see very clearly we should go up and fill towards that next range. So let's go ahead and jump in our buy position. We'll put, I don't know, 10 units and see how it plays out with our stop loss below here and our TP up here. Confirm, and let's just let it play out. And there you go. Extremely quick, but it has ended up hitting TP. You can see quite clearly we had that liquidity being grabbed, and then within a couple of 1 hour candles is very clearly and cleanly filled up towards the top of this range, ending up hitting TP, this case with absolutely no drawdown. Now that's not always the case, but obviously we love to see that. Let's look at a few more examples though, so that we can show you how well this model just works. Let me just click the random button and we can find another example. Start new. All right, so here we are on the charts. Again, just found another area here. Let's mark out some support and resistances, which is obviously the first step. Now, the important thing to note here is this entry model also works in a consolidating market. Now, gold is definitely bullish here, but what tends to happen as well is you do tend to actually end up ranging after a strong push-up. So we've had a strong, consistent push-up. We are then beginning to sort of range within these areas. And then what ends up happening is you have a liquidity grab normally, and then a continuation up following the trend. So the trend is still bullish. We've just sort of taken a pause here to accumulate and grab some volume from the market. But let's take a look. Obviously, we have our bullish trend on the 1 hour. Now we need to go ahead and look at our support and resistance areas. We have a resistance level right here, which is very, very clean off this high right here, this high and this high. And then obviously we have our next one, which is going to be up towards these highs here. And if we're looking again below for some key areas, you can look at this area right here, and you can look even further down. So let's go ahead and see how this one plays out. Can we get a nice little model here? We're pushing up. We haven't had an entry just yet. Anything? We've got our, okay, here we are. So it just went a little bit too far, but there we are. We had a pullback being made. And let's take a look at what actually happened here. So we have our, again, bullish structure, and this makes it a lot easier actually, because now we've broken out. Like I told you guys, we've broken out and we've ended up going ahead and making some more structure. Now you've got another higher low being made, and what actually ends up happening here is you make sort of a double low. But as you can see, this candle right here, we have essentially just now gone ahead and swept all of these previous candle lows, as well as retested back into our rejection zone, which I told you about earlier. And now we have that bullish confirmation close. So that's step number 4, 5, and 6 all in one right now. So now you have that bullish close going along with this bullish time frame here. We are looking at taking buys after this confirmation close. Now, again, if we're looking at our target areas, what can we look at here? We can either look at this previous high right here, as I told you guys, or we could look at where the next high would be, which would be all the way up here towards 42.91. Now, I don't know if we're going to go all the way up to test this high, because this is a very strong rejection area. So if it was personally me, I'd be targeting here, if not even here. But for the purpose of the video, let's just see how this one plays out. We're going to go again, 10 unit buy, and we're going to go ahead and target the same stops below the candle low, confirm. Let me slow this down, because that last one played out way too quickly. And let's just see how this one actually goes ahead and plays out. So we have I honestly didn't expect that to happen, but there we go. Ended up clearing both highs, which is pretty insane. You can see just how well the model worked. Even when I didn't have faith in it, it ended up playing out nicely, which is, yeah, great. So let's just take a look at one more model before we get onto the rest of the video. Let's just go ahead and find another random bar. Now this example, let me show you an example of taking a trade inside the consolidation range, because what you can end up actually doing as well is, instead of waiting for this breakout above here and taking the entry around this area, you can actually end up trying to get an entry from below here, expecting the trend to continue up like this, and essentially getting a way better entry off of the same move. So if we just go ahead and let this play out here, I'm hoping we can get a liquidity sweep below this range, and then that is going to enable us to go ahead and grab the entry. If I just skip this forward a bit. If you want to trade this model in a trending market, all you have to do is wait for the trending area or the consolidation range to be swept. So the lows of the consolidation, which I'd be looking at, would be around here, and then a bullish close back into the range. And that's sort of an aggressive way to take this. Oh, and there you are. It formed right here. So you can see quite clearly, if I drop it back a little bit here, what ends up happening is you end up sweeping these lows here, and you have essentially a clear formation of this model. Now what happens right now is, obviously you're in a bullish market, because we are essentially bullish overall on gold, as you can see right here. What ends up happening is we start to consolidate, and I would actually say we're kind of bearish here, but overall we are consolidating within these two ranges. Now what you can do here instead is, since we've now swept this low here, we've swept the overall range low, and you've swept previous wick lows here, what you can go ahead and do is, very simply, now that we've swept those lows, grab liquidity and close bullish, you could have a super aggressive entry targeting either the top of this range, or you could target even further towards like some more, you know, established highs here, or even higher up towards the left. Now again, let's go ahead and see how this one would have played out. We can take some buys right now, stop loss below here, and let's put a really aggressive TP just to see how this one plays out. Confirm, and let's see. Is this going to play out? So immediate rejection off the bottom of the level. I would definitely be break even around this point, just because we are now essentially breaking structure, and we've made some bullish structure here. It shouldn't really come down towards these lows, so risk free on that trade. And let's skip it forward. This is taking a while. So it would have ended up stopping us out break even, unfortunately, and then running towards TP. But for me, I like to do that anyway. I would manage it the same way. But yeah, look, so there you are, 2 wins and 1 break even. Definitely not bad at all. But if you want to implement this model, there's 7 easy steps that you can take to take this from this video right now into your trading and into printing money within the next month or so. And this is exactly how you're going to do it. Now, first of all, I want you to go ahead and learn the model. Now, this video right here introduces you to the model. By the way, this model is called the Sky Dweller, if you want to know. And this is a model that I've invented myself. But most importantly, you need to learn this model in detail. I have other videos on this model in my channel, as well as on my YouTube streams. I trade it every single day. So learn the model in depth, understand it like the back of the hand, and until you know it like the back of the hand, you cannot move on to step number 2. Step number 2 is very simple. Test it. You need to collect data on this yourself. Now, it's all well and good me telling you that this works. I know it works, but you don't know me from Jack. So test it yourself and collect data on it. Most importantly, journal this trade so that you can get used to trading it on an eval or maybe on a demo account. You get used to trading the model and collecting data. Now, I have a free journal. The link to that is in my Discord. The link to my Discord will be in the description of this video. That is exactly what I used to actually test this exact entry model. It's my data collection journal. It's super in-depth and it's completely free. So make sure you utilize that, because I promise you that tool is going to be extremely, extremely helpful. Now, step number 4, we use the data that we've collected within this journal and essentially are either back testing or forward testing to make decisions going forward. Now, what I mean by this is when you're trading this model in future, you're not going to be saying to yourself, oh, Sam told me this model, but I don't really know if it works. You'll be taking the model and you can flip over to the page in your journal and see that it has exactly an 83% win rate, or it has a 1-to-1 risk to reward on average, or it works only on gold, or it works only on NQ, or whatever your data is telling you. You can essentially enter into a trade with extreme confidence, knowing, holy shit, whenever I take this trade, there is a 83% chance I'm going to get a 1-to-1 risk to reward, or whatever your journal data says. The point is, you're not going to be taking psychological decisions or emotional decisions. You can manage the trade solely off of what your data tells you to do. And that's going to give you the confidence you need to go ahead and implement this on, first of all, an eval. Get used to trading it, get used to actually being live on the market with this model and spotting it in real time rather than back testing or replay mode or whatever it may be. Step number 6, very simple. Once you've got a month or so trading it on eval, you're used to the model, you've got at least 50 trades of data, you can go ahead and take this to either your live account or your funded account. This model works, it's so clean, it's absolutely perfect for trading continuations. Trust me, my students have got payouts just from using this model alone. In fact, I'm going to throw up on the screen a screenshot right now of one of my students who went ahead and actually only traded the Sky Dweller model and ended up getting himself a $1,000 payout a couple of days ago, which is absolutely insane. And step number 7 is print money. If you follow all of these steps right here that I've just told you, you will indeed go ahead and print yourself some money, because this model is so effective, it's so simple. You catch the continuation almost every time. And I promise you, this is the model that I've used to make the most of my money in the market. Now, if you did find this video helpful, make sure you go ahead and drop a like and subscribe to the channel. I stream every single day live trading on YouTube, as well as giving you so many free and valuable videos. Now, make sure you go ahead and subscribe. And if you do want to learn more about this model and all of my other entry models in detail, because this was just an introductory video, make sure you go ahead and watch through the entire trading education playlist, which is on my channel, because I promise you, if you watch that entire playlist, you are going to be a profitable trader. Other than that, make sure you join the free Discord so you can go ahead and get the journal. And I'll see you guys in the next one. Much love. Peace out. Bye-bye.